here. I'll try not to yell. Hello, good morning. We're going to call everyone to attention here and get started. My name is Brian Nicholson. I'm the Director for Critical Materials with the Energy Futures Lab. I'd like to thank everyone for coming here this morning, as well as welcome those folks that are joining us online. For the people in the room, I think we're expecting anywhere between 80 to 110 folks joining us via the webinar link. And for those of you online, I think we have roughly 60 people here in the room with us this morning. We're here at the Energy Transition Center in downtown Calgary. And we had the pleasure of receiving a wonderful welcome song as well as blessing from Hal Eagletail, the spiritual leader for the Tsuut'ina Nation just out of Calgary. And of course, Hal reminded us that while we are talking about building out critical material value chains here within Western Canada, we're all part of a bigger picture, and we're dealing with a living earth here as well. So that is the reason we are here today, and the topic of our conversation this morning. This webinar is part of a broader full-day program that's being put together for Calgary's inaugural Climate Week. That's being led by our good friend of the lad, Leor Rothschild. And as part of this event, we have pulled together this wonderful crew, this fine people of panelists that are going to be asking the question or answering the question, why the West? Can we unlock Western Canada's carbon and climate competitiveness in the critical minerals value chain? And this is, I can't stress it enough, this is very much an open question. This is not something that we have predetermined already, as is everything that the Energy Future Labs deals with. It is a very complex issue, and there are no easy answers. So to provide some context, the Energy Futures Lab, as well as the Battery Metals Association of Canada, the Transition Accelerator, and the Indian Resource Council, we're partnering together to form the Western Canadian Critical Materials Alliance. And I'd encourage everyone to check out the Energy Futures Lab website to learn a little bit more about this initiative. But essentially what we're doing is pulling together a broad coalition of stakeholders and rights holders from all across Western and Northern Canada to more quickly, sustainably, and equitably integrate into national as well as global supply chains for critical minerals. We are specifically looking to pay attention to and focus on how do we play more of a value-added role in this sector? Can we move beyond just the export and extraction of raw critical minerals? Is there a way in which we could leverage our chemical and processing and engineering experience in order to, as well as like the industrial DNA of Alberta in particular, in order to refine and chemically convert the Western Canada's critical minerals before we export them beyond our region? So this, in all honesty, will be a difficult endeavor, but we do have many credible competitive advantages in order to set up this industry here within Western Canada. And the workshops that we've hosted thus far, they have confirmed that there's a great deal of eagerness and optimism in order to actually work together to build this industry within this region. But what we're here to talk about today is, as we think about building out the Western Canadian critical materials supply chain, what will be the carbon and climate impact of this industry? And to what extent would we be carbon competitive? And that is the goal for today, is for those people here in the room as well as those people online to walk away with a better understanding of how to think about this particular topic, and ideally to be able to speak about it a little bit more outside of this room. Lastly, before we get started, I just want to thank a few people. We mentioned it earlier this morning before we went live on the webinar, but thank you very much to the TMX group for sponsoring this webinar this morning. We wouldn't be here without them. When you're in Calgary, it's really important to distinguish what we're talking about. This is not the TMX pipeline. This is the TMX Financial Services Group, the good people that own and operate the Toronto Stock Exchange. And if you haven't heard, it is the world's largest market exchange for all mining as well as mineral exploration companies, I think representing something like 40% of global companies in this space. So thank you very much to the TMX group. This wouldn't have happened without them. And finally, just want to thank you to the Clean Resources Network, the Clean Resource Innovation Network, or CRIN, for allowing us to use the space today and providing the wonderful support throughout the rest of the day. So Lyle, let's meet our panelists. I'm going to ask them to self-introduce themselves as well as their organizations. Firstly, Monique Fry. She's going to be here today to help us understand some of the tensions and trade-offs associated with this very complex issue. Monique, if you don't mind, can you introduce yourself to this audience?
Great, thank you, Ishmael, and good morning, everyone. Just wanted to also say thank you to Hal Eagletail, who's always happy with a smile, a song, and a joke to make sure that we get set off in a good way, and appreciate the offerings as well as tobacco. My name is Monique, or Mo Fry. I'm from the Chiam First Nation, which is a part of the Stalo tribes in beautiful British Columbia, which I am regretting that I don't live there right now, given the snowstorm and heavy shoveling I had to do yesterday. I am part of a duo, husband and wife team, 100% First Nation-owned Indigenous consulting firm called Sustainative. And I'm here today and come to this work and panel, I guess, because of my diverse experiences and background in the energy industry and nonprofit, education, and in mining, and bridge these gaps between Indigenous and non-Indigenous communities and industries. So really excited, and also want to give a shout out to my past students that are here in the room today. Chris and I, my husband, also teach at the University of Calgary in the Masters of Science program for Sustainable Energy Development. So nice that they saw that I was on the panel and came, so thank you.
Thank you so much, Mo. Now we're going to move to our industry veteran with over 35 years in the sector and has recently been consulting on a global basis, working on things like life cycle analysis. We couldn't have a more appropriate expert here on this panel than Lyle Trytten.
Thanks, Brian. Did you just want to finish, or my name's Lyle. I'm from Edmonton, Treaty 6 territory, a Misquachie. I grew up a rodeo kid, so please let me catch the bus home tonight. Don't make me stay here. I'm kind of friendly. I'm a chemical engineer by background. I did my training at the U of A. I did a master's degree in heavy oil processing under the guru of the industry, Murray Gray. Fully expected to spend my life in the heavy oil industry. But as we all know, recessions happen, and I ended up drifting out of oil and into the metals business quite by accident. It was an opportunity. I thought I'd try it for a couple of years. 32 years later, I still fundamentally enjoy the business every day. It's endlessly fascinating and endlessly challenging on a technical basis. It's very different than working in the oil industry, but there are a lot of similarities. I've worked in R&D, sustainability, engineering, operations here and around the world. I've had the opportunity to travel on business and work in 6 continents now. I bet you can guess what the one I haven't worked in is. And that's been a fantastic opportunity to compare and contrast how we do things here and how they're done elsewhere. And I've learned an awful lot from that opportunity. So I'll leave it there. Thanks, Brian.
Thanks a lot, Lyle. So our last panelist is Chris Malayney. I had the pleasure of working with Chris for many years with the Government of Alberta, as well as Alberta's Industrial Heartland Association. Thank you so much for being with us here today. Please introduce yourself and tell us a little bit about the AIHA.
Well, good morning, everyone. It's a pleasure to be here, and as Lyle pointed out, we got up here. The intelligence erodes as you move further right down this panel. So I'm happy to be situated where I am, and I think that's about appropriate. But my name is Chris Malayney. I'm the Director of Business Development for Alberta's Industrial Heartland Association. Our association is a municipally funded nonprofit with a mandate to attract industrial investments into the industrial cluster that's northeast of Edmonton. So the region itself, it's home to about $50 billion in assets, and that's book value. Replacement value be much higher. About 40 companies operating, really about 20-some large-scale industrial complexes within that region. We exist as an association. We've been around for about 26 years, and really the core mandate is to attract more investment. So I lead our business development efforts, which is responsible for going on the world. And it's conceptually pretty simple job. It's figure out what types of projects make sense for our region, where do we hold comparative and absolute advantages, find the companies who can deploy those assets. They both have the willingness and the expertise to actually build those assets in our region. Go get in front of them, talk about the advantages of our region, and then help them through the entire process to get to a final investment decision. That's really the core of why we exist and what I do within our team here. So critical minerals is very interesting to us. It's an emerging area for our region. It's mostly hydrocarbon processing in our region today. Granted, we do have some mineral processing through Sherritt within the region, and that's the long-standing asset. It's been there since the 1950s, the golden star in the mineral processing space within the industrial heartland. So we want to see that grow, and this is an exciting time to be part of this space, and glad Brian asked me to be part of the panel.
Thank you, Chris, so much. I owe you for that, and I think I'll be the last person to speak on this panel, so get ready for that. So we're going to jump into the questions now, and just a heads up, we're going to start with some of the supply chain, market, and technology fundamentals, and once we get that basic fundamental understanding here, we're going to transition over to Monique to help us understand some of those tensions and trade-offs associated with this big topic. So we also do not have a whole lot of time, and we're going to try our best to set aside 10 minutes at the tail end here to allow for some questions from the audience as well as the webinar folks as well. So let's get started. It's important for us, I think, to level set a little bit for our audience. There's probably a diversity of existing understanding as it pertains to the critical minerals and materials supply chain. Lyle, can you help us understand what in the world is the critical minerals and materials supply chain?
Sure. So I've got an hour for this part, right? Realistically, what we're talking about is a supply chain that starts with critical minerals, and I'd like to thank my colleague Marilyn Spink for really drilling into my head that we really don't care about critical minerals much, except in so much as we use them to get what we really want, which is critical materials that go into building the things that we need in our society. It's really critical materials that we need. And so critical minerals are a step along the way. It's a nested supply chain that touches many areas from mining through processing to get up into manufacturing. Canada has a critical minerals list of 34 items on it, but that when you unpack things like rare earths and platinum group elements, it's really 53, well, a couple of them are not actually elements because they're potash, but it's 53 different elements in there, which is effectively half the periodic table. So it's not very focused. But if you're talking about half the periodic table, you're talking basically everything we make today. Why do we care? Well, we care because what we make today, manufacturing today, is incredibly complicated and much, much more so than it used to be. 100 years ago, we didn't make the things we make today. A computer today, if you trust AI, which, take it with a grain of salt, contains about 70 different elements. In the 1990s, it was about 30. Steel contains many elements, just steel alone. The type of steel alloys we use in geothermal or nuclear power typically contain, by design, 6 to 10 different elements within them. It's not just steel is iron. It's actually much, much more challenging than that. And we're designing new materials all the time. So we need to be talking about the process of getting to those materials, and that's a big business. In Canada today, mining and mineral processing is about just over $100 billion GDP activity. It's about half the size of the oil and gas extraction and processing, but it's a big jobs driver. We have many more on a per GDP basis. We have many more jobs in mining and mineral processing than we do in the oil and gas industry. And so as an economic development tool, it's incredibly powerful, and we need to therefore be looking at how do we localize more of this here rather than leaving it outside to somebody else.
Thanks, Lyle. Chris, if you don't mind, can you maybe add on to Lyle's comments there and just help us understand why does this supply chain matter so much, and what does it mean for Western and Northern Canada in particular? How is it relevant?
Yeah, and I think Lyle touched on it. It's in the name, they're critical because of the materials being produced. These are high demand materials that are being required both domestically as well as with the trading partners we deal with. So if we don't do it here, it's going to be done elsewhere. It's the question of do we want to participate in this chain? And I agree with Lyle, we view it as an economic growth opportunity for Canada, as well as an industrial competitiveness enhancement opportunity. It's an ability to add value to our resources here. You can't do this all over the world. There's only so many places that have access to these minerals. We have them here. We can develop them here, and we're always emphasizing add value to the resources here, whether it's hydrocarbons or minerals. Add value, you get diversification, you get the jobs, you get the taxation, you get all the economic spin-off and the development of a workforce that can be more diverse across the economy. So it's very important, and I mean, the reality of the situation right now is that if we don't play in this space, we're going to need these materials as Canada, and you're going to be left to the suppliers who are playing in this space right now. And for the most part, these are supply chains that are dominated by one or few actors, and we will be kind of at their mercy. And those types of countries can view longer-term strategies, look longer than kind of the pure economics on a project-to-project basis and how we want to contribute there. So I think we really need to take a look at where we want to be years and where our role in this space is. I think the second question is kind of how do we play in this space? It's a question we've been dealing with for a while at the Heartland, at least since I've been there for the last 7 years. So we do what typically anyone does. We hire consultants to answer the question for us. So we've done a few studies in this space. First, going back a number of years, looking at how would an industrial cluster like ours, more from a midstream downstream processing space. I wouldn't say so much on the mining side. That's not kind of really our focus, but we were trying to figure out how we play in the midstream processing space. So we did a study around battery materials, and most recently we just completed a study with Benchmark Mineral Intelligence looking at how we play in the critical material space. So they looked at the 35 minerals identified by the Canadian government, screened those down to what's of strategic importance to Canada and where do we actually have the feedstocks available. From there they took, I think it was about 13 minerals, and looked at a number of other economic factors. Do we actually have a low-cost feedstock? Do we have the industrial base to support these types of processing facilities? And from there, shortlisted another 8 minerals from there and processing opportunities. From there, we actually built out cash flow. So like, what are the economics of these projects? What do they look like? Where do we actually have a competitive advantage versus other jurisdictions in Canada and the globe? Because when we're working with companies, they're looking all over the world where to deploy these assets. And what they found was that there's these no-brainer opportunities that we should be chasing down, being nickel, cobalt, copper, lithium, rare earths, and synthetic graphite production. So it gave us a short list of projects to really go out and chase. And this is for the most part verified by industry. We're working with companies, I'd say with the exception of copper, I'm not aware of any copper companies we're working with, but we're working with companies all across these value chains on what an asset would look like within our region. One of the interesting findings from this study is that these aren't screaming hot opportunities. These aren't MPVs that are amazing IRRs of 30%. I think if that was the case, we'd see these things being developed. These are challenge projects. They're marginal at this point, and that's really because of the state of the global markets and the supply chain dominance by one or few actors. So one of the takeaways was if we want to play in the space, there's going to have to be some level of support, whether it's government support or other regulatory enhancements to really enable these projects, and it's going to require that longer-term vision of how we play in the space and do we want to play in this space.
Thanks a lot, Chris. That's really interesting and helpful. So Chris, you're traveling the world, you're talking to all these investors. They're coming to Fort Saskatchewan to visit with you guys. Can you give us a better understanding? Sometimes it probably feels as though we've moved from drill baby drill to mine baby mine, and it's almost questionable to what extent that ESG factors are still of importance to global companies that are looking to situate themselves in the heartland. So can you help us better understand to what extent do investors still care about climate footprint, carbon footprint here?
Yeah, I think they still care. And one of the things across like all the value chains we work in is I think we need to acknowledge that Canada and North America there's a high regulatory burden to developing projects here. That's both on the environmental side as well as the other ESG factors. When we talk about ESG, there's obviously social and governance. And we are kind of leading in that space for how you actually develop industrial projects. I can't speak to the mining side. Lyle's probably I know he's a much better resource for asking about the mining side of things. But on the processing space, we have pretty stringent standards in Canada. So when we're working with companies, there's almost a natural buy-in to the ESG narrative because they know there is a high hurdle and burden to developing projects within Canada and North America. I will say specifically on the emission side, I'd say we've seen the interest in pursuing these ultra low carbon projects or doing flagship low carbon complexes somewhat dwindled in the last couple of years. And that's not just in the mineral space, that's in the chemical space, that's in a variety of other spaces as well. And I think that's just state of the economy. When everyone's struggling around just the baseline economics, the emissions profile becomes somewhat secondary, and it's more so satisfying what is the regulatory requirements here. But also, what carrots and I guess sticks exist to structure a facility that fits within the Canadian landscape.
Okay, interesting. Lyle, if you don't mind, so we have this critical mineral supply chain. We've got the upstream extraction, midstream processing, refining, and chemical conversion. Can you help us understand the relative carbon footprint associated with those segments, and just how does this relate to other industries that we would be familiar with?
Sure. So we're talking about, across the critical mineral space, 34 different groupings. It depends. They're all different. But broadly speaking, for the things we talk about the most, things like nickel, cobalt, and copper, things like rare earths, what we find is that the ore grades tend to be relatively low. You're talking typically less than 1% for a nickel or copper deposit that you're looking to extract today. Maybe 1 to 2% for some of the rare earths when you measure them as rare earth oxides, not the actual elements. We mine that, and mining is an energy intensive operation. You use explosives, you use haul trucks, you use excavators, and then you go through a mineral processing stage. So typically what we do is we dig up a bunch of ore that's maybe 0.5% copper, for example, and we go through a processing stage at the mine where we concentrate that to something that we can then transport to a smelter or refining facility elsewhere. Maybe 20 to 30% nickel or copper in that concentrate. That's a very electricity intensive process. So if you're in BC or Manitoba, Ontario, Quebec, that's a very low emissions thing. If you're running off diesel generators, well, it's very high emissions activity. That concentrate then goes into a processing stage where we typically do a first stage, we call it primary processing, to make a high-grade intermediate for refining. That primary processing, again, it depends on your material. Some of these minerals, in Canada, when we deal with nickel, copper, cobalt, and some of the others, these come as sulfide minerals. That sulfur is actually the energy source for the smelting operation. So you burn the sulfur, and that actually provides the heat to melt the concentrate and separate the metals into various fractions, and you get rid of a bunch of it as what we call slag. You save some of it as what we call matte that goes on to refining, and refining is very electricity intensive again. We get process emissions from some processes along the way where we have carbon dioxide or carbon inherent in the material that has to leave it, and that makes a chemistry developed process emission like we do in the fertilizer business. CO2 is a natural derivative from natural gas or methane when you make hydrogen. When you look across the whole spectrum here, on the mining basis, lots of fossil fuels for mine trucks typically, and lots of electricity. The smelting space, usually a lot of heat is required, sometimes a lot of electricity. In the refining space, a lot of electricity is required. So the carbon competitiveness piece really comes in where are you doing this and what are your energy sources for doing that?
All right, Lyle, let's keep on going. Help us understand from a geographical perspective how we should think about the emissions footprints. And if we were to build this industry here within Western and Northern Canada, does that automatically mean that our emissions will skyrocket? Or is there something special about this region that we could somehow, some way offset emissions that would otherwise be combusted in other parts of the world in other supply chain pathways?
Okay, so here I might make myself a little unpopular in the room because I'm going to diss the oil industry a little bit because of its very nature. The reality is that if you're doing these things sensibly, and Alberta is not well blessed in a lot of the critical minerals, but it has some. BC has a much better geological endowment just because of the geology of the province. Northern Canadian Shield in general tends to be pretty good. If we can connect these things to the grid, if we can adopt modern practices, which we would do for new facilities, these are not hugely energy or emissions intensive businesses. So when we think about it overall, mining and mineral processing is a $100 billion a year activity. Oil and gas extraction and processing is about a $200 billion a year activity in Canada from a GDP point of view. When you look at it from emissions per GDP or emissions per job, the mining and mineral processing sector is way lower than oil and gas, right? So we have far fewer emissions per dollar of value we generate. We have far fewer emissions per job that we generate. And so as we look to a future where the oil industry is expected to be declining, and we're replacing it with a critical minerals industry that is less emissions intensive, then that actually means we should be able to do okay. Having been in government relations for industry, talking on carbon regulations with 4 different governments in my time, I will say, there is real truth to the energy intensive trade exposed discussions. But we're talking about building a new industry here, not losing jobs from an industry that is exporting, that is moving overseas where regulations are easier. I think we need to be very aware that part of the challenge is that the loss that we have if we get really stringent on this, far beyond what our peers do, that loss of economic development for our future could be pretty crippling for us as an economy. And so we need to do it right, we need to do it well, but we can't, for example, just demand things that are just economically and infeasible.
Thanks, Lyle. So, Chris, we're going to shift back to you. Can you help us understand the role of clean power it plays in this context? To what extent is it, kind of a differentiator for a lot of the companies that you're talking to that are looking at investing here within the region?
Yeah, it's on the midstream processing space, and I'm going to speak in generalities here because it's obviously a complex area. All the different projects are unique to what they're trying to accomplish, but it is a big, I'd say, somewhat of a disadvantage in Alberta relative to certain other jurisdictions. You could look kind of different parts of Canada or other places like Scandinavia in the world where they have access to particularly hydropower for projects, so it's low cost, it's clean. We don't have that same resource here, so it's hard to energize facilities here with that type of power. And conceptually, we're seeing with a lot of the project developers in our area looking at specific projects contributing to the battery value chain, they want that green power. They're telling the story that they're making materials which are going to get sold to a manufacturer to make batteries, sold to an EV manufacturer to displace combustion engines somewhere in the world. So they want to be able to tell that story of how electrification kind of runs through the course of the materials. So they're almost looking at it like table stakes, that if you don't have green power, you're not even in the conversation for these types of facilities. And that's a large generalization. There are companies looking at different alternatives, and they're more open to looking at energizing or deploying different technologies to lower their emissions. But it is kind of a headwind for us. There is some opportunities in Alberta. There's some unique features of our grid. You can do physical offsites and get the attributes delivered to your facility, but they're costly. You're looking down a higher cost pathway for that power should you go down there. We have seen cases, just anecdotally, we were working with a synthetic graphite company who was looking at a large scale project in our area at a high level synthetic graphite. You take waste pet coke, upgrade it to needle coke, and you can turn that into synthetic graphite, get sold into the anode manufacturers. And it's a unique opportunity for us because you're basically using byproducts from the oil and gas industry to participate in the space. But one of the reasons they ended up choosing Scandinavia over Alberta was strictly around the renewable power that they had access to. It wasn't the only reason, but it was a large contributing factor to that decision.
Yeah, just to emphasize that we lost a major investment in what range was that roughly?
That was multiple billions.
Multiple $billion range because of the lack of access to affordable and abundant clean power. So it's
one of the reasons. There was multiple, but that was one of the contributing.
One of the contributing factors.
Brian, can I just drop? So having been myself in discussions with battery companies, with electric vehicle companies, they're definitely looking at that as a key criterion. And I think something that we need to keep in mind is that when we look south, more than half of the states have a cleaner power grid than Alberta does. And these are states that are attracting a lot of investment. It's not the only reason they're attracting investment, and their grids are not clean, right? But they're better than Alberta, and they're getting better because they're increasing their share of renewables. There's states that have very low carbon grids. And so we have not just a competition overseas with Scandinavia and Europe, but we also have competition down south, and that is, of course, heightened by the current political climate.
Okay, thanks, Lyle. That's a good addition. And don't worry, folks, we're going to get to Monique here right away. Just one more question beforehand. So, of course, Chris, you mentioned there's a lot of potential advantages that we have here in Alberta. One of them is obviously carbon capture and storage. And, you know, the layman might think, and I must admit, I thought about this at first, we could just kind of hook a tube to the back of these facilities and hook it to our Alberta carbon trunk line and, you know, carbon capture, and we store that, and Bob's your uncle. It's obviously not as simple as that. Can you help us understand, is CCS a competitive advantage when it comes to decarbonizing these refining and conversion facilities?
Yeah, it turns out hooking that hose is a lot more expensive than people thought for these facilities. So if in lieu of the right incentives to encourage that, we're not seeing a lot of interest in CCS, specifically on the processing technologies themselves. I don't think we've had any projects come through looking at doing like CCS attached properly to the processing technologies. Where we have seen it be an advantage is for power and for other inputs such as hydrogen, where you could have potentially low carbon power if you use gas power generation with carbon capture. Once again, it's expensive. But also blue hydrogen. The assets are being developed in our region to utilize sequestration to produce a lower carbon hydrogen. And that is an input to some of the mineral processing opportunities. So that is a potential advantage, but I'd say I haven't seen personally any of the CCS on the actual processing equipment proper.
All right, thanks. Monique, thank you for being patient with us as we got some of that stuff out. We're so happy to have you here on the panel, and the fact that you have worked on a global basis with Indigenous communities internationally. And could you give us an understanding of what the mood is out there globally in terms of this tension between the fact that we need to build these facilities and establish more resilient supply chains from a national security perspective, but also the imperative to decarbonize. But at the same time, this urgency is going to potentially come at the risk of moving too quickly with Indigenous communities. What's going on globally that you could help us understand as we think about Canada?
Yeah, for sure. You know, some of the concerns are the same globally as they are locally in terms of the tensions that arise. I think one of the major factors that we see internationally is that Indigenous and local peoples or peoples of the land don't always have the same rights or recognition under their constitutions, under legislation, under policies that support, you know, FPIC, that support good decision making and the ability to even negotiate in terms of what are, you know, good benefits, what are good opportunities that that exist. And so a lot of my work has been about going and sharing sort of, you know, what we're doing right in Canada or what we're still, you know, sort of working on. But, you know, in some of those cases, the other kind of tensions that arise is that there is a divide between what local and Indigenous peoples believe are their rights and responsibilities, and that might differ from sort of the thought of what not just industry but also environmentalists and conservation folks are doing in those spaces to sort of mitigate some of the factors, and yet, you know, a lot of these things aren't necessarily led by Indigenous peoples, and they don't even know how, internationally, some places, to even get into the conversation. How do they do that? So that's a big concern. And I also just wanted to flag that this issue of decarbonization is just one of the factors and the elements and the tensions that arise within Indigenous peoples' communities and decision making. It is about water quality, it's about the land, the actual physical harm, you know, to the mother, for them to be able to practice their traditional practice, and in most cases subsistence living of fishing and hunting, etc. And that we have a hard time as Indigenous peoples just looking and focusing on the one piece without looking at the whole, right? Because everything is interconnected, and that ability to just focus on one thing is very difficult.
Excellent. Okay, that's an interesting situation. If you don't mind, can you bring us to the Canadian environment now and just help us understand It's very important to clarify here. We acknowledge that different communities, different Indigenous nations perceive these issues, experience these issues in different ways, and we're not asking you to, sum it up on behalf of Canadian Indigenous peoples. But what have you been hearing in terms of this tension between the fact our federal government is arguably moving quite quickly and trying to advance critical mineral projects across the country right now, and the potential impact that plays on Canadian Indigenous communities?
Yeah, I've heard a lot of people talk about, that the projects need to move at the speed of trust that exist. I think there are some good examples of relationships and trust that have been built in Alberta, in particular between First Nations, Indigenous communities, and those energy partners, but mining, not so much, right? And so in some places, they're going to be walking into situations that they're not quite aware of yet. And so how do they do that in a good way? I think some of the concerns are, though, that they're going to happen so quickly. And I think it's really important for us to understand just what that means. Like, how quickly is that? Because from my understanding, and I am not a miner, and I don't know anything about that, really, but that these things, depending on how far they are along the exploration sort of pathway, these things can take a long time. And I think it's important for us to realize that there is time to do it in a good way, meaning with Indigenous peoples, if they are included from the very beginning, if they're involved in all the different ways that exist. And there's so many sort of best practices and things that can lead us to that. But I think there also would be the cases where we have to realize that with FPIC and consent, even when all the information is there, that there might be some communities who will decide and say no, that that's not what they want, that there are other economic development opportunities that better fit their philosophy and their worldview, and mining might not be it.
Okay, thank you very much for that. Lyle?
So, my experience both here and working on a project in BC for one of my clients, absolutely we hear you from the industry, and we recognize and respect that. The challenge that Indigenous communities face is really about capacity. Some of the communities that we work with are very, very busy. And there's a very limited capacity within the communities, not only because of historical education and these kinds of things, but also just the number of people that are available, the amount of money that's available to hire knowledgeable consultants to make sure that you don't just get our side of the story. And that's something that governments are working to try and fix, but it's a slow and difficult process. And that capacity within the Indigenous communities for that consultation and co-building, co-design is hugely important. And we can't let frankly, our politicians off the hook on continuing that work.
That's a really great point. And I think, whatever the speed that it goes at, the industry itself, they have to be prepared, both the companies, industry, and government, to make sure that they are prepared to support, right? And what does that actually mean when we talk about Indigenous-led or co-design or co-led? That I believe that a lot of Indigenous peoples and nations have a very good understanding now in Canada of what their rights are. And now they're really focusing on what are their responsibilities and how does that take into account, which includes all of the environmental impacts, the thoughts around decarbonization, et cetera, et cetera. And I think the government, all the governments and the industry partners are going to have to really be open to that. And I don't necessarily think that they're all ready to understand what that actually means from a true relationships perspective.
Thank you, Monique and Lyle. So it's my understanding that when you look at it from a global perspective, around 50% of critical mineral deposits are close or within Indigenous territories. And from a Canadian perspective, we like to say all roads to Canadian critical minerals go through Indigenous lands. So Monique, if you don't mind, we've touched upon it a little bit, but can you help us understand how do we think about balancing the needs for the green economy and our energy transition and the need to extract and refine these minerals and the impact that it places on from a social as well as environmental ecosystem perspective and a climate perspective, but at the same time, the national urgency and the need to transition. So it just seems to me that there's inevitable trade-offs. We can't optimize for each one of these things. Is there a way in which you think we ought to consider these things?
This is a really hard one, right? Because it is really about that balance. And I think, as I mentioned, we are fully aware of our rights now and our responsibilities. And I think we see a lot more, or I have seen based on the folks that I've had the privilege of learning and working with, just how important the understanding of our Indigenous philosophies of everything is connected is so important. You don't have to explain cumulative impacts to us. We know more than anybody exactly what that means, right? And so ensuring that everything is done not just for sustainability, but for thriving. Speaking about, you know, sort of the economic opportunities, whether that's growth and jobs, et cetera, I think we've learned a lot from working with energy partners here in Alberta about what works and what didn't. And we know now sort of where we would like to go. Nobody wants to, you know, build stairs for the facility anymore. Nobody wants to do housekeeping for work camps. We want to be included. And I think, again, bringing it back to the level of lift and effort that it's going to take government support and industry support, which I know is hard for smaller scale mining companies. But if we all aren't on board, we're just setting each up for failure, because when those small mining companies are out there and they don't understand relationships and they don't understand partnerships with Indigenous people, they're going to make mistakes that are going to then be whoever takes them over later for when the big stuff happens. Larger companies who do have that understanding, it's too late, right? And so how do you do that? So I don't have an answer. In that it really is just going to take a concerted effort of everybody to come together and understand. And it's going to be an unlearning for many, I think, in spaces that they've never had to worry about before, right? So, yeah.
In past conversations, you've mentioned the informed part of FPIC. Can you help us understand how that might be relevant here?
Totally. I think, you know, obviously, everybody wants to see the FPIC process embedded in all of these new sort of, you know, major projects that are pushing through. But there is this element of informed is not just about the informed consent piece, but are communities actually informed about some of the things that Lyle was mentioning? What are the materials? What does it take, you know, to get them out? What is going to be the overall footprint? What is it going to help us with? Why are they important? I think as a general, like, Canadian person, I don't even know, like, what the minerals are in Alberta, nor how they're going to benefit us. And then it's really difficult for us to make that informed decision about whether or not we want to participate in it if we don't know everything that entails. And so again, it's a heavy lift of education and awareness that needs to happen. And a lot of the materials are quite old about what the mineral space even looks like within Canada or Alberta. And the emphasis on what or how Indigenous peoples can participate or be a part of it is even less.
Lyle, if that's the case, and you know, Indigenous communities are going to be looking for credible information on the emission profiles associated with these projects in their lands, what is the state of global and Canadian life cycle analysis work these days? How dependable are these things, and what is it telling us?
So part of my business is working as a technical reviewer on life cycle analyses for mineral projects globally, and you know, as a technical guy, you know, my focus is on making sure that they are a reasonable representation. But there's a lot of art and a lot of choice in how these models are built. The EU is, as usual, leading the way in codifying and standardizing some of these approaches. And that will be of benefit, but you can get very different answers from two companies doing an LCA on the same project. And we see that routinely, whether it's on an individual project or like an industry-wide one, that you get very different results. And you really need to query all of the underlying assumptions to understand that, which is not within the capabilities of just about anybody who isn't deep in the space. But some of the leading practices that we're starting to see become standardized are maybe not going to be helpful for Alberta, because it's things like hourly matching of renewable electricity. Just having a contract with a solar farm in southern Alberta for your total power demand for the year is not good enough anymore in terms of saying, you know, my power is carbon free. No, because you draw grid power 24/7, 365, and sure, you have a contract, but whoopee, you're still actually drawing power that is not carbon neutral. And so this is an evolving space, and it's becoming regulated first in the EU, and then it will move elsewhere through things like the battery regulation, as they're starting to do through their carbon border adjustment mechanisms, other things that they're bringing into play. That LCA is the mandated tool, but we really need to standardize on the approaches used within it to make sure that it is accurate and representative. Because companies that are engaging in this space have a goal, right? And their goal is to get the lowest possible number. And you need to make sure that you're actually representing it appropriately, not just as a PR stunt.
Okay, thank you. We have only a few more minutes here before we move to audience questions, but Monique, if you don't mind, can you help us understand some more concrete ways in which Indigenous communities can become more embedded into the projects from a decarbonization, ecosystem, environmental protection perspective?
Yeah, I think there's a lot of ways that we can do that, and I think there are some, you know, really good examples. But again, I think the question is, are government and industry ready to ensure that that is going to be done in an intentional and real way? We've seen examples of where it hasn't gone well, where they've had Indigenous advisory boards that, you know, without a clear terms of reference, without a clear mandate, who are just there perhaps for a checkbox exercise. We've seen a plethora of reconciliation action plans, but again, these are not enforceable, nor is anybody, you know, analyzing them or ensuring that saying this is good or this is bad or any of those cases. And so there's nothing really holding those things together. And I think there is quite a big distinction between co-design, co-led, and Indigenous-led. And again, I think government and industry have a hard time wrapping their heads around in a way that they've done business for so long this way, and why change now? And it feels like an imposition in a time when they're trying to balance budgets, keep on time, get the things done. And I get the truth is, if you want to do it, that these are the kind of things that you have to do. I also just wanted, you know, sort of to raise the thought of this work in sort of economic reconciliation. And as far as I know, there are only going to be a number of major projects across the country, and it's only going to impact so many of the 634 First Nations, never mind the Inuit and the Métis communities. And to me, economic reconciliation is not just for the few, but it's for the many. And so how can these perhaps smaller opportunities that aren't on the big major project list support Indigenous peoples through economic development in a good way for reconciliation? And I think we're focusing too much on, you know, sort of these big things, but that's not going to benefit everybody across the country. Just a few community examples that I've seen in initiatives across the globe are, you know, opportunities that folks are doing without any support, actually, from government or industry. In Guyana, in the Rupununi, there's a group of Indigenous women who are taking it upon themselves to learn how to test their water quality because of the mining that is happening within their communities, where the government is not even bothering to monitor the water. And they've taught themselves how to do that, and they are going out, and their data is being fed up to the government, actually, and to the Minister of Environment in a place where they're not doing it for them. So I think those are some really good examples. In Australia, there is a program called Fire Sticks that is using cultural burnings to mitigate huge wildfires within the country. And Australia has a carbon credit unit program. And not only by bringing back cultural traditions that is supporting language and cultural kinship, it is helping for the emissions in that country and battling. So there are definite examples, and I was just in Tlaquehuit Nation last week or the week before in Tofino and met with global folks in Canada, Australia, Tasmania on nature-based finance solutions for folks and all the different things that exist, and people are ready. And I think it's, again, is everybody ready to hear those very Indigenous-led examples and ensure that they have the support that they need as well for things to go through.
Thank you, Monique. Chris, companies, real quickly, if you don't mind, where companies are also apparently ready to do this, many companies, but what about this green premium? I'm sure most folks in the room are wondering, does this really exist in terms of a buyer is willing to spend more for a product that is more responsibly developed, either from a climate, environmental, or social perspective? Is that something you're hearing about or seeing?
Yeah, it's an interesting question. I don't know. It's a mixed response. You've got certain companies looking to develop these lower carbon or cleaner products saying, yeah, we can fetch a premium. We've seen this across a lot of sectors. That premium doesn't come to fruition. You see announcements in the news that it is happening, but there's light on details of what's the term of these agreements. Are they just that first tranche of product coming online where you can get it? I know there's examples like even, I think it was the London Metal Exchange was looking to bifurcate nickel based on carbon intensity. That went nowheres. There wasn't an appetite. There wasn't liquidity for that product. So we're seeing it starting to fail. I think we're seeing kind of the regulatory piece come in to enforce that premium. And I think largely we're seeing if you're not the brand owner who can pass along those costs to the end consumer, they're not willing to play in the commodity space and just have a higher carbon or a more expensive product that's lower carbon relative to their competitors. So I'm not really seeing it come to fruition. I'm not an expert in this area, but I think the jury's still out. It's early days there.
Okay, thanks. All right, I've been hogging the microphone here. Let's transition to questions from the audience. The quicker you are with the question, the more questions we could actually get in here. So I'd really appreciate it if we're going to start with a question from the webinar folks. Elsa, if you don't mind getting started.
Yeah, thanks, Brian. We've got a couple questions that came in online. So a common issue with rapidly growing industries, especially natural resource industries, is that the growth of industry often outpaces the ability to recognize or respond to new environmental impacts. What are the panelists seeing as potential novel environmental challenges associated with the growth of the critical minerals value chain, and or what kind of initiatives is the mining industry working on to reduce impacts?
Lyle, you want to get us started?
Sure. Well, that's huge and open-ended, but realistically, one of the challenges that we face in industry is it's an ever-evolving space, partly because of increasing regulatory pressure, decreasing limits on exposure for certain things. Measurement technology is getting better. That presents increasing challenges. We can measure contaminants that we didn't even know were there before. But at the same time, we're seeing an increase in the ability to deal with them when we know about them. And that's very encouraging. So there's companies that are doing great work on both the detection side and on the mitigation side. I would stress that the mining industry today, the processing industry today, is not, if you build it now, it's not going to be like what we built 40, 50, 60 years ago when we didn't even have environment departments in government. So some of the legacy issues that we deal with, they're bad. Like, I get it. But that's not how you would build it today in Canada.
Thanks, Lyle. Do you want to? You're good. All right. I saw Mei Huang. She fired her a hand up right away. If you don't mind, Mei. And then we have a question over here on the side.
Thank you. Great facilitating, and thanks for the thoughts among the panelists. When I look at the title of today's session, Why the West, I don't think we have discussed or compared us with the East. do we have a few minutes to just address that part of
When you say the
equation?
east, do you mean of
Central
Central
Canada,
Canada.
Quebec, and Ontario, yeah.
So this is an economic development opportunity that cannot be met by one region alone. Not a region within Canada, not a region like Canada, right? This is really an opportunity as we develop these supply chains for partnerships globally, regionally, in order to get these things done. Different regions have different geologic endowments. Different regions have different capabilities to do things like heavy industry. Alberta's a leader. We don't often recognize that here, how special we are in terms of the ability to build and operate heavy industry that other regions just are not as competent at doing because they haven't been doing it for as long. We need all parts of Canada working together to do this, and we need all regions of Canada working together in order to do this in the most beneficial way.
All right, I think one final question here from the very back.
Hi, I'll make it fast. Do any of the FPIC provisions in any impact assessment or like C5, do they have a extraterritoriality clause that applies to mining companies that are working overseas to engage with FPIC with the First Nations and other countries?
Sorry, extraterritorial.
Extraterritoriality, so like any Canadian companies operating outside of Canada.
Right. Well, you would think, right, that FPIC would apply no matter where, but we have, what am I doing? See, hold it higher up? Okay. But I have been to some places, for example, in Zambia, where there are Canadian companies mining in those areas, and the concerns there sure don't seem to be like they have followed FPIC. They are working quite heavily, the local chiefs and chiefdoms there, where the mines are literally in their territory, to try and even get meetings with CEOs is quite a different landscape. And when I told them that, you know, you should have chief-to-chief meetings between your chiefs and CEOs to air these things out in the least, and they don't even get that. So for sure, I would say you would think, but I believe it's because jurisdictions just aren't the same. So even if you are a Canadian company working, you're going to follow those jurisdictions that are relevant there. And unfortunately, because FPIC is not a legally binding element, it is a nice to have in cases where they don't need to do it.
Excellent. Thank you so much, Monique, for answering that. And unfortunately, that's all the time we have here for questions. I think it's really important that our panelists have taken the time to spend with us here today. Let's give them just 30 seconds to... I wasn't not quite wrapping up here yet. I'm glad you guys are so appreciative, but just 30 seconds to a minute. You know, if you had to conclude with one takeaway for this audience, what is it that you want them to walk away thinking about? Chris, if you don't mind starting us off.
Yeah, sure. Maybe jumping on May's comment there, like there's a tremendous opportunity here. It's comparing east versus west. There's unique opportunities. There's spent catalysts. There's byproducts that exist here. There's a real opportunity to participate in this value chain. So we do think it's a good opportunity, and it's kind of, we need to strike while the iron's hot. If we miss this opportunity, we might just miss it. And I think in Western Canada, we've done that a number of times. So I think we need collaboration across all levels of government and groups like this coming together, really figure out how we're going to play in this space.
Wow.
So I liken this to the urbanism debates that we have, right? It's difficult, it's messy, there are impacts, but you're not going to develop the best city you can by just offloading all those impacts to urban sprawl and letting everybody drive into the inner city. You actually need to have a balanced development approach that shares both impacts and rewards. And it's the same thing in the minerals space. We have a once in a lifetime, frankly, not once in a generation, opportunity here to create a new economic development path that can be very impactful for us. But because a lot of the negative impacts tend to be at the mine site location, that tends to be rural, remote, tends to fall on Indigenous communities, they end up suffering a lot of the impacts. And we need to find a way together, co-working, in order to craft that economic path forward, but we have to do it with a sense of urgency. Later is too late.
Monique?
Yeah, that's great. I participate and work for an organization called the Resource Exchange, and we are a multi-stakeholder, multi-forum platform that comes together, and I'm just going to say our tagline, which is the thing, that we believe that strong, inclusive, Indigenous, and local governance systems lead to better outcomes for people and planet. And if we don't do that, we're not just going to get no on projects, but we're going to miss out on the ability to greenify and keep things for the next 7 generations to come.
Excellent. So I think we heard here today, Western Canada, Northern Canada has a potential role to play in building out this supply chain for Canada and for our allies on an international basis. But it matters on how we work together in order to focus our attention, really pursue purposeful innovation opportunities to decarbonize this industry and do it in a way that's in the interest of Canadians. So I really appreciate you folks coming here today. Let's join me in giving them a hand of appreciation. And thanks for joining us online. I hope it was of interest, and I will have you guys sign off here now. For those of you here in the room, we're going to be undertaking some group exercise